was getting a lot of questions on the Twitter about the VIX expiration and kind of why that played into things. So let's just take a look at this morning's note. So we went through and I talked about the dynamics that I used to see, particularly in April and May. And what that was very elevated volatility. So clearly here, this is a shot from May. If you look at the screenshot from April, which I linked here, it's a very similar picture, right? It's the same general idea here that the day before VIX expiration, which would technically be tomorrow, the markets really seem to rally. And I put that note out there this morning because, I didn't want it to be one of those things where futures were up higher overnight and no one knew this possible dynamic was at play. But what happened in May of last year was that the VIX was extremely high, obviously around 30. And it just got smoked, as you could see, right into VIX expiration. And it was the same dynamic where we had very big VIX call positions in the market. Now, I would say heading into this, if you were to tell me that there was like this pinning mechanism that the vol complex would pin kind of like the S&P does, and I didn't think really before last year that I really believed in that all that strongly. However, what 2022 did was it sustained the VIX or volatility at really elevated levels, right? And so I think just the amount of Vega that was in the market in general, even though we didn't get like a VIX 40 or 50, the generalized sort of normalized level of Vega was higher. And so, the idea that you could sell VIX futures or whatever it may be to push the VIX down so that all of these calls would expire was something that I started to really grab onto or believe in. And again, for those of you who are new to this, the VIX options stop trading tomorrow. They settle officially at 9 a.m. on Wednesday. But since the VIX index options stopped trading, you could still push the VIX index around because the S&P options continue to trade. They're persistently trading. So for those of you who know that the VIX is based on the S&P options prices that are 30 days out in time. So the weird thing is the VIX index options stop trading. The VIX futures settle at 9 o'clock on Wednesday morning, but you could still move the VIX around by pushing the price of S&P options. And there was actually a lawsuit around this many years back, probably 5 or more years back, about kind of, shenanigans around the VIX prints. And so, I suppose the sort of like outright shenanigans are gone, but there's still probably some under the cover shenanigans or just sort of byproduct of various flows. So again, the idea here is that by crushing the VIX, this is the Vanna component, the S&P rises, right? Because how do you get the VIX to go down? Well, you need vol to come in. So you could sell VIX futures and implied vol would have to come out of the S&P options, which generally, we would consider to be a tailwind for options because puts you would think would lose more value relative to calls. And that is a mechanism to get the rise. So coincidentally here, if you look at where we're at I'll just bring up TradingView here so we could take a look at what's happening today. Coincidentally, when you look at the VIX pricing, this is a real squashing, right? We opened up around 28 and then have just careened lower to 24. And coincidentally now, granted, we still have to go through tomorrow, but coincidentally, that's that 24 area call, right? There's 100,000 calls there, and then the amount of calls drops sharply down. And then further, we have the most puts at 20. So I'm looking for the VIX to stay down in this area. And if the VIX stays down in this area, that means that the S&P is likely to, maintain. And so the other thing that you flip over to is you look at, okay, well, where are we trading on the S&P? We know that 3950 has been a fairly large gamma level, as is 390 specifically in the spiders. And so, I think the index is fine, just chilling out here around this general area. We could even maybe sneak a little bit higher, but anywhere kind of in this area, I view as a lower volatility zone for the S&P, which ties into this idea that, we could really push higher, or the VIX, should push lower or hold this kind of sub 24 area that we were talking about in the morning note. Now, of course, the trick here is looking forward. Well, we got FOMC, so we're going to have the situation where, okay, we probably pin or maybe we move up a little bit somewhere in this general area, right, at 9 a.m. on the open of Wednesday. And then what happens is the VIX index is now going to be based off that second VIX future. So if we go to VIX Central, you can just see the VIX futures pricing. So the VIX index now for the March is going to clear or trade at wherever the VIX index is. So the VIX front month future is going to clear or settle, I should say, at the VIX index price tomorrow. So that's what the dynamic is. But then look at this gap, because all of these futures here have to account for the fact that the Fed is tomorrow, right? So there's a lot of event volatility that's keeping this very elevated. So immediately once we clear expiration tomorrow and this expires, this becomes the front month, and you would expect the VIX to kind of lose this pressure that's holding it down because it's got to kind of snap higher to the VIX, I think. So the idea, excuse me, that the VIX is probably going to move higher after Wednesday morning is there because these VIX futures are all tethered higher because of the Fed. And then we're going to have the Fed come out and either say, hey, everyone gets a bailout and maybe the market rallies a little bit, or we don't care about the bank runs. You guys are all screwed, in which case maybe VIX spikes materially higher. It's kind of a challenge. But that's kind of what the dynamic is of what you're watching. So you can see there's this weird path dependency here because of expiration where, all right, the VIX has an incentive to stay low until Wednesday morning, and then it actually has an incentive to immediately kind of pop higher into 2 or 2:30 p.m. on Wednesday.